Assalamualaikum, and our topic for today is home financing product from RHB Islamic Bank Berhad and AFIN Islamic Bank Berhad in Musharakah Mutanaqisah application.
Hi, Assalamualaikum. My name is BINTI MOHAMAD MAHZAM, matric number 279008. In this part, we present about product feature of RHB Islamic Bank Berhad and AFIN Islamic Bank Berhad. First of all, we look at the home financial product features of RHB Islamic Bank Berhad. Type of product regarding home financing is Equity Home Financing Islamic. Equity Home Financing Islamic is a financing for the purchase of residential property using the concept of diminishing partnership between the bank and the customer. Syariah concept of the product is divided into two types, namely Musharakah, Mutanaqisah, and Ijarah. The facility of the product is financing purchase of residential property in Malaysia and refinancing of the SIT, mortgage financing from another financial institution in Malaysia, such as balance outstanding plus cash out facility. For the qualification for applying this product is individual aged 18 years until 60 years old and any nationality. In addition, we also can see here some product features of AFIN Islamic Bank Berhad, where their products are divided into two types, namely Home Invest Islamic and Home Invest Islamic. Home Invest Islamic is the perfect solution for homeowners looking to purchase complete and under construction properties or refinance existing mortgages at least RM200,000 and above, up to 90% of the property value. Home Invest Islami, a conventional mortgage loan product that offer financing up to 90% of the property value, inclusive of MRTA and interest cost, for a contract period of up to 35 years. The Syariah concept of this product is Musharakah Mutanaqisah. The facility of these two products is offer flexibility with your payment, so you can deposit extra amount of cash on top of your monthly repayment to save on your interest charge. Next, the qualification for applying this product is individual at 18 years and above, any nationality and foreigner, but only for home built in its best Islamic. The next home financial product features in RHB Islamic Bank Berhad are fees and charges, where it has redemption statement fees RM50 per transaction, letter of confirmation of EPS withdrawal RM20 per transaction, and additional financial statement RM5 per page. This product also has late payment charge, which will impose headwind or known as compensation. And the last of home financial product feature as RHB Islamic Bank Berhad is takaful, where customer need to take two types of takaful, namely house owner takaful and fire takaful. Also see the home financial product features for AFIN Islamic Bank Berhad section in the fees and charge section. They have a redemption statement RM50, withdrawal fees RM25, and security document retrieval fee RM30. Late payment charge in this product is same with RHB Islamic Bank Berhad, which is imposed headwind. While at this product, customer also should take two types of takaful, namely house owner takaful and mortgage reducing term takaful (MRTT). Last but not least, in this product has a major risk in the Ijarah rate section. The Ijarah rate of this financing is floating and it is pegged to base rate. The Ijarah rate may change according to changes in the reference rate. An increase in Ijarah rate may result in higher monthly return. That's all from me.
Now we go into issues and problem solution for home financing product based on Musharakah Mutanaqisah contract used by Bank RHB, Islamic Berhad and Afin Islamic Bank Berhad. There are some issues raised from the product that we are currently investigating, that is home financing product based on Musharakah Mutanaqisah, implemented by several banks such as CIMB and RHB Bank. First issues or risks that we managed to find out is credit risk. It is associated with the ability of the customer to repay the amount of financing that has been made in accordance to the terms of the agreement. Credit risk will arise if the customer fails to repay the bank within a certain period of time. The second risk or issue that we managed to find out is operational risk. Banks are forced to spend extra money on managing the payment. Customers fail to repay the rent in the Musharakah Mutanaqisah home financing contract. And the last issues or risk is Sharia risk. Often occurs in Islamic banking due to improper documents along with Sharia principles and confusion raised about the legal aspects of the muamalah. When there are problems, of course, there will be solutions that we manage to find out to counterback the problems that occurs from the previous discussion. The risk management framework embraces the three main stages in the Musharakah Mutanaqisah home financing contract. The stage comprises the initial stage of the agreement, the current stage of the agreement, and the final stage of the agreement. For the initial stage, bank actions to identify customer information such as customer background, customer status, whether it is eligible to receive the financing. On the current stage, the bank should take precautionary measures and constantly monitor the ongoing financing of the Musharakah Mutanaqisah home financing contract. And the final stage, the monitoring process needs to be carried out and the current status of the subscribers needs to be recorded. Documents relating to the transfer of interbank house and customer rights should also be carefully reviewed so that no confusion arises during the house transfer process.
The second issue is related to the influence of bank profit rate projections on customer when there is an increase in the overnight policy rate (OPR) and base financing rate (BFR). In stable economy, it is not a problem for a customer to continue pay their installment at the normal rate. However, when there is an increase in the OPR or overnight policy operations, the bank will inevitably be affected by the rate of that OPR embodied in the BFR charged by the bank to the customer receiving the financing. When the OPR is high, the bank will raise the BFR. Despite this, will cause the profit charged by the bank to the customer is also increases. As a result, customers have to pay more when this situation occurs. As burdensome if the rate charged by the bank is too high, so the emergence of uncertainty as charged by conventional banks, because uncertainty in Islamic transactions like this should be avoided as it can lead to the element of fraud. Next, for the solutions, Islamic financing products need an effective resolution to overcome this problem so that later Islamic banking is not considered to practice gharar or any element that are prohibited in Islam. These two banks has officially stipulated that every Islamic banking product has a cap rate for the profit rate it charges. After the economic situations or the high OPR and BFR increases, bank will not be fully affected by the rate set. Customers with this do not have to worry about paying for something uncertain. Instead, it has been explained that the level of profit that these two banks will charge is limited. For example, the profit ceiling rate by the RHB Islamic for equity-based housing financing product was 10.05%. As a result, no matter how high the BFR increase or the impending uncertainty, RHB Islamic set a benchmark of the maximum level it will impose on customer. When a BFR is low, it is a bonus to customer to enjoy a lower financing rate. On the other hand, when the BFR goes up, the customer is guaranteed a set BFR ceiling rate.
Assalamualaikum warahmatullahi wabarakatuh.
My name is NURDIYANAH IZZATIE binti MOHAMAD. My matric number 276AA4. So, the third issue is related to the problem of the developer failing to complete the house, abandoned house purchased by the customer. This is often the case for a category of homes that are still under financing under construction. Beginning October 2008, this Equity House Financing I product is expanded to finance homes that are still under construction or have not been built. So the question arises here, to what extent the role of the bank if the house fails to be complete by the developer. RHB Islamic as a partner will be with the fund customers to address this issue. The method currently used is to return the installment payment rate advance already paid by the customer and terminate the financing contract. So, in this case, the customer does not have to bother to proceed with the installment payment provided the house purchase is not acquired. This can lead to a better level of partnership where the bank not only share the purchase but is also responsible in the event of any untoward incidents. At the same time, the customer also actually has to repay the money already paid by the bank to the developer. This is because the customer has made a performance guarantee (PG) to the bank when the agreement is signed. With the solution, the customer will actually have to pay more than what is received back from the bank depending on the amount already paid by the bank to the developer.
In conclusion, in applying a MOHAMAD contract to a product, various issues and challenges require solution, analysis, and improvement. Issue can be from the perspective of MOHAMAD and can be from the laws that are already practiced in a country like Malaysia. Hence, in the use of contracts MOHAMAD, which is currently diverse, research is necessary to ensure that the MOHAMAD contracts is dynamic and competitive, so that everyone can use Islamic banking and finance industry. This is because a good product and being an option can certainly be beneficial to invite people to reject usury and choose Islamic-based system. Therefore, the supply of house financing by Musharakah Mutanaqisah should be offered at Islamic bank that offer financing housing from the concept of Musharakah Mutanaqisah. This is facilitated to the customer if they want to implement refinancing to earn cash. Other than that, it is the one of the measure of Islamic banking institutions such as RHB Islamic Bank and AFIN Islamic Bank to develop their product further needs to be offered to the bank. That's all from us. Thank you.